Hello, everyone. Welcome to today's session. Let's jump right into it here. Market conditions still sitting mildly bullish. Bull market rank sitting at 25.93, and that is our momentum indicator here. This 1 year time frame sitting at the upper end of this range. You can see starting back here in June of this year, we really topped out around that 25 range. Price activity is still continuing to climb, but the momentum is certainly starting to slow with some of these retracements that we've had in the market. If we jump over and take a look at buy-sell ratio, still showing less than 1.67, which anything less than 1 means that that red line is above the green line. That means there are more sells than buys in the database. Now, remember that what this is not doing, this is not an index, this is not related to an index, this is just essentially all of the stocks that are in the database currently and giving the buy and sell numbers. It's not giving hold signals here as well. And so sometimes you'll see the lows of the cells be at different levels, or the levels of the highs, because they're not including any of the hold. So if we have a big meltdown and we see a big sharp move lower, then you'll get a big spike one direction or the other of that big group of stocks that are in those hold ranges, and they have yet moved to one direction or the other. For example, right here you can see actually let's go over to sectors. So on the sectors tab, you're seeing this hold range right here, 2,000 stocks that are essentially transitioning. They're either transitioning from the hold or from the buy to the sell, and they pause here in the hold, or they're transitioning from the sell to the hold, or they can transition. Obviously, they can go from buy back to hold, and then back to buy, and then back to hold, back to buy, or from sell back to hold. Okay, so these are that non-trending group of stocks that are in the database, and that is not a part of that buy-sell ratio until they transition to one or the other. Let's take a look at sentiment. We've seen sentiment top out and pulling back into that retracement here as well, and S&P 500. If we jump over to the market ETFs and look at S&P 500, getting a decent move today. We'll see. We've had a couple of bottoming tail bars. Remember that those bottoming tail bars represent price activity that opens at a certain level, and then it trades lower, and then there's demand that comes in, and then the buying comes back up this direction, and then you get the body at the top, whether that's black or green or whatever, or just a solid line, but the line represents demand. So the line is representing price activity falling and then buyers stepping back in to that. So those are bullish bottoming tail bars, or hammer patterns. They're candlestick patterns that show that intraday price activity, which can be valuable when we're talking about price zones, when we're talking about a support zone, and we're looking for price to hold that zone. Okay, one of the things I wanted to go over again today is, if you remove the signals and you're just looking at pure price activity, okay, if we were to even just to get rid of the Fibonacci line, if we get rid of the volume, and we're just simply looking at price activity, we want to be very aware of this direction. Okay, the right to left. When we're looking at price activity over here, we always want to look left this direction and see it where we're at. So we're getting these different price levels, because ultimately, as price is moving higher, okay, you're getting areas of demand. You're getting high buying demand that's taking place at certain levels. Remember, the stock market is an auction. Think of it as people. Think of it as an auction. Don't think of it as bars or as volume or as indicators crossing over or doing this or that. Think of it as people that are lined up, that are willing to buy or sell at a certain price. Okay, institutions are waiting at certain price levels to buy more. If I have to accumulate, a million shares of a stock, and I'm a big institution, well, in order for me to do that, if I put all million shares in at a buy order, well, what's that going to do? That's going to spike the market or spike the stock quickly, because that million shares, if I have, let's round these numbers down, okay? If I have 100 shares that are someone wants to buy and they want to buy them at the market price. And I have a seller that has 10 shares and I have a seller that has 20 shares. Okay, and let's say that this is at a price, I'm not going to use this S&P number, but let's just say it's at $100. Okay, and then somebody's willing to sell 10 more shares at $110, and someone's willing to sell 20 shares at $120. Okay, these are obviously pretty wide, but if this buyer of 100 shares at $100 drops in market order, they want to buy. They're going to be able to buy these guys' shares. Okay, that knocks this down to 90 shares. They're going to be able to buy these guys 20 shares. That knocks that down to 70. So they still have 70 shares that they need to buy. And so there may be 100 shares right here that finally completes that order. And now they're full 70 shares. Let's say that this was at $130. That full 100 shares is now, they've now been able to buy into that. But in order to do that, it wiped out all of the supply that was the overhead supply. Everybody that was selling, that had shares to sell, these guys bought them on the way up. Okay, and that's when you see these real massive spikes, is you have a whale in there or a bunch of them that are buying at the market price, and it's slicing through all of these sell orders. Okay, they're filling on all of those sell orders. Well, that typically doesn't happen. Big orders can certainly happen. When they do happen, that's what happens. The stock will have a massive move higher, or the market will have a massive move higher. But typically what they'll do is they'll say, what we want to do is we're not going to do a market order. We want to buy at, let's find a stock example here instead of the market, because there's actually some good examples. There's this one, quantum computing right now. These guys are going hog wild. It's up 36% again today. Okay, let's add some volume in here. So this is what institutional buying looks like when there's a massive group of buyers, or one big buyer, or even better, a whole bunch of buyers that are all interested in a stock. Okay, this is the average volume now is 100 million shares per day on a 200 million market cap stock. Okay, so if you have a whole bunch of buyers, and back here at $2, they have that story where you've got a bunch of buyers that are buying right here. Well, there's nobody selling at these prices, and so these buy orders just wipe out anybody that's willing to sell. And when you have thinly traded stocks or smaller cap stocks, and there's not a lot of float, the float is the number of shares that are outstanding, then you get these big moves higher. Well, typically institutions over time, they're going to say, well, we bought a whole bunch of shares right here, and it pushed the stock price higher. And maybe they bought, we'll say 50 shares just to make the numbers easier, but it's probably like 50,000 shares, 50 shares right here, and we're willing to pay $2.25. Okay. They're not going to buy all of the shares at once because it pushes it higher. So now they have to wait. So their next order is still filled right back here. They're saying, we want to buy as many shares as we can again at this price. And so they drop a whole bunch of shares back in, and then you get this moving higher. So my point is that these retracement pullbacks are areas where you're going to get additional demand. Let's go back to that S&P chart. You're going to get buyers that are stepping in at certain price points. Okay, and that happens at these support and resistance areas. So when you get a pullback and you've got a big enough demand of orders that push the price through a resistance area, then the buyers that happened here, they're going to say, okay, well, we want to buy more. We couldn't fill all of our orders. It pushed it out of range. It pushed it to a price level we don't want to pay anymore. So let's wait for a pullback. Well, here's the most realistic pullback location that you've now got. These guys that bought right here, now they're moving over to here, and they're saying, okay, I couldn't get all of my order filled here, but I want to buy more. The next place that I'd be willing to buy is here or back here. And if the price ever pulls back to these areas, then you're going to get a wave of buying at those locations. So it's important to be watching for. Now, there are additional indicators or tools that are helpful to help us see that. The best one in my opinion, is a Fibonacci tool, particularly because it can connect to the high point and the low point of the current trend. And then it gives us key areas as well. So we want to be able to recognize where support is, but then we also want to be able to recognize where these key areas are taking place as well. So that's kind of that support resistance. The rationale, the logic behind support and resistance is that there's more demand at that price point. There are more people interested in buying right here than there are people selling, and so you get that push higher. And if the demand is strong enough and there are enough people that want to continue to buy, that's going to continue to push that price even higher. So it's a very, very basic concept. I think a lot of traders are so concerned about, am I using the stochastics or the on-balance volume or the Bollinger Bands or the moving averages or the, you name the indicator? It's just price. You could do everything you need to do with just this alone right here. Looking for price activity, looking for the trend of that price activity, looking for support areas, looking for confirmation of that support, managing the risk so that you're appropriately sized into a scenario that of a trade that if it doesn't work, what's the risk that I'm dealing with? Okay, so that's why we're just really trying to focus on the simplicity. The other thing is we use a daily bar only. So you'll notice you can't go into the 5 minute and the 1 minute and the 15 minute and the tick by tick, because most of the time that's just not helpful for most investors. To look and stare at charts, it usually just creates emotional reactive decisions instead of saying what is my goal. And our time frame with the methodology is, it's a little bit longer, weeks to months, typically not years. Usually these holdings don't last that long. On the long end, they might last 2 or 3 months before you get some kind of a retracement of some kind, sometimes a little bit longer than that. Okay, but as you're looking for price momentum and price activity, we're looking for the characteristics. Okay, so characteristics of the stock are based on the overall system itself, but then we have these tabs that are doing different things. For example, ADMA, if I look at it like this, I'm seeing, okay, I'm in an uptrend, we've got a pullback, but then I can add in some of those momentum areas as well. And that's when you can add in some of the color. That just helps us to recognize, oh, I've got a stock that is, it's a high demand stock, and I know that because it had a big sell-off, but there was a big bunch of buyers that were willing to pay, and then you get a retracement, you get a higher low, more demand. Buyers are interested in buying this stock as of now, and that continues to be the case until it's not the case. Okay, so you're continuing to trust that overall direction until it reverses, and in some cases that can be significantly higher than where the price activity is currently. Case in point on some of these names, VST, this utility stock, this has been a massive stock over the last couple of years. These guys are in the utility space, the electric power generation. With AI, these stocks are they're only going to get more and more profitable because AI and Bitcoin are just massive energy hogs. They need a ton of energy to run all of these CPUs, all of the data centers that are popping up now, and the massive infrastructure that's taking place. Okay, so the energy behind a lot of what's happening with Bitcoin and with AI are going to show up in these names. And this stock has gone from $30 to $100, even back here, all the way back to whatever that was, $20. So we're looking for these trends. We're looking for these opportunities as they're continuing to evolve. Now, they don't last forever. So that big picture looks easy, right? It's saying, oh man, I can see clearly these trends. I can see clearly when I shouldn't be in these trades. I can see clearly when I want to participate in these trades or in these trends. Well, when you look at that at a shorter time frame, sometimes it's a little bit harder to trust it or to see it. Okay, so we're wanting to see some confirmation at these levels. So this stock here's a good example of confirmation. It's bouncing higher. There's new demand. There's big volume, probably an earnings report, and that starts the whole game again to say, okay, these guys are growing quickly. And then we run into some extremes of these trends to say, would I want to buy now at this point? I don't know. Maybe not, because it's more than likely going to have some retracement or some volatility. But at the same time, some of these names are getting away and they don't give a pullback or an opportunity to do that. As you're looking through the list, this is a great place to focus on. I talked last week, or I talked Tuesday a little bit about the Muscle 20 strategy, the portfolio methodology, and essentially what you're doing is you're owning the top 20 muscle stocks all at the same time. Okay, so you're buying into this group of stocks, not the new buy list. Okay, that's going from hold to buy, but the muscle stocks group, and essentially you're just buying them at the current price that they're at, and then you're managing those. Now, obviously, there's more volatility to this strategy because you're buying into more of the theme. You're not necessarily focused on the exact price point itself. For example, we're not looking for a retracement on these names from a hold to a buy, and we're waiting. Adding into the strategy, we can do that, but the initial dump of setting up the portfolio is buying the first 20, and again, with the allocation that you're focused on. So we started a new portfolio a few days ago here, and you can see just with this, it's already up 14% based on that. Now, some of these names, they're very volatile. This one's up 65% just in a couple of days. And that's buying right here. That's buying at the top end of that trend. And that's buying, let me get rid of this. That's looking at it right here, even back a little bit. So you get a move higher, you get another move higher, you get another move into that range, and you're saying, man, should I be buying into this stock at this point? Well, what have we talked about? We've talked about the demand that starts to show up. The trend starts to happen here. And now two things happen. Two things could happen. Number one, we could say, I missed it. I missed the move. I don't want to trade into this name now because it could retrace, and I could have missed the move, and I'm the last one to the party, and I'm the bag holder, right? So that happens sometimes, certainly. The other side of this is the fear of missing out. The fear of missing out is, well, it's taking off. I want to buy it now. Okay, and so you go into either too big of a position, but in this case, we're wanting this setup and a pullback, and market conditions. We're just seeing a new boom here. These are taking off, and a lot of these names are really doing pretty well, just because of the momentum, the size of the stock. These market caps, they're 2 and 3 and 400 million. They're small cap names. You're seeing a move in small cap names. You can see the Russell 1, 2, and 3,000 are leading this market ETF sector. So a lot of these muscle stocks in this group, they are small and mid cap names, and they're just really performing really well right now. So one of the ways to be able to participate in all of these kinds of names is to buy the entire group and have a really wide stop loss and use the entire sell signal, or a really deep stop loss, as I mentioned before. Let's go back into this and let's look at a couple of these and see where we place the stop loss. So if we go back here and we look at, I'm going to go with some of these winners, this RCAT. The initial stop was at 250. This was a couple of days ago right here. So from a $4 entry, the stop loss at 250, that's a 50% stop. Okay, that means that of this position size, of this amount that I'm willing to allocate into this trade, which in this case, I'm using 100,000 example, and so each position is 5,000. If you're using a $10,000 account, each position would be 500. Okay, you're still using 5% allocation because we're fully allocating 20 names into the full account that we're using. Now, this doesn't have to be your entire account, but the amount that you've set aside to utilize this strategy. Now, there's some benefits to this. One of the benefits is it's very easy to manage because we're not looking at a really tight stop. We know that there is interest. We know that there's demand. We know the technology is there. We know the thesis, right? The theme of AI, the theme of growth, the theme of infrastructure, the theme of technology, the theme of energy, the theme of clean energy. Okay, those are not changing. Those are continuing to evolve, and the best way to find some of those early names are in this group right here. It's designed to pull all of these names to the top. Okay. SMR, here's an example back here, not from 9 to 20 in that uptrend. And even Dave, some of these stocks that have had these big run-ups and they've had nasty retracements from 50 back again, okay, but then they take off again. These are the kinds of stocks that you can add into those portfolios and allow for a bunch of volatility. Okay, and that stop can be a little bit looser than 50%, but using a 50% stop on that is going to allow you to have a stock like FTEL. This is the biggest loser so far, and on this 6-month time frame. So here's the 1-year time frame. Let's stick with that 2-month time frame. We had a big run up, a deep retracement. We're taking off again. The buy signal happening here on this one bar is at right here. Well, it's retracing back. In our wheel portfolio, we have a little tighter stop loss. So this was actually stopped out right here. Okay. With this methodology, you're saying, well, my initial stop, let's look to see where the stop is on this one. And my stop is at 16. Okay. So the stop loss is all the way back down here at 16. Okay. Now that might be, these can all be tweaked in a trading plan to say, oh, I don't want that much risk. I want to set it tighter here, or whatever that is. You can adjust that risk simply by adjusting the potential maximum loss. Now, potential maximum loss can be a whole lot worse if you get a gap lower, which we've dealt with a lot with. You get an earnings report, it gaps lower. You get an earnings report, it gaps higher. Okay, something like that is definitely going to move the stock that way. But then you're essentially taking, and you'll notice these. Let's see if it has. No, it doesn't have that. But these stop losses are really wide, okay, allowing for 50% volatility, and oftentimes that volatility it's going to drop down to a point where there's a new demand zone. Okay, look where we're at here and here and here. Now there's potential that these buyers that pushed it through this level, they may say, hey, I've got a whole bunch of shares left over that I didn't get filled on right here, but it's back to 24. Hey, let's load up again on this stock. So you'll see a retracement, a pullback, and then you start to see some demand come in, and then it takes off. Okay, so it's allowing for a lot wider range of volatility in anticipation for some of these bigger moves. Now the allocation has got to be sound. You don't want to do it. The diversification, like which stock is it that's going to be down 30% or up 60%? We never quite know, but these characteristics, the characteristics of all of these stocks in that muscle stock group have that capability of doing this. And when the market conditions are right and the market conditions are moving and there's demand for these kind of companies, this is the result, is they can really have some massive moves. You have MSTR that's moving like crazy because Bitcoin is moving like crazy, and these guys have all of their cash in Bitcoin. They have nothing to do with Bitcoin other than all of their cash is in Bitcoin. So they are kind of a proxy for Bitcoin because they own so much Bitcoin. The entire company's cash balance sheet is in Bitcoin itself. So their cash alone is benefiting, and so the company price, the value of that cash is increasing. So the stock is going to be moving higher here as well. And there's just a lot of really cool companies. In fact, it was this stock here, this quantum computing stock. If you go out and take a look, I like to go out to this, not that one. I like to this to their website, go to Google and then go out to their website, and you can do a little bit more homework on the quantum mechanics of this quantum computing. It's essentially just these large, massive, high-speed computers. The demand for those is going to be more and more and more and more with AI because it's all about computations. It's all about the quality and the speed and the number of computations that computers can do. That's why GPUs are taking off. NVIDIA is doing so well. Some of these other companies now are starting to be pulled into that group to say, well, what else is going to benefit from some of these AI moves? So keep an eye on some of these names. You may not know what they do, and that's okay because it's a starting point. I prefer to start with these names and the ones that are getting the demand and that are moving higher, okay, instead of saying, well, I think this company might do well in this market, or this company might do well in this environment because of this, this, and this. Instead, we can say, I have no idea. I have no idea what the honest company is, okay? But they're moving well. So let's now take some time and let's go in, and then we can do some homework, okay? And say, oh, these guys are this or that, or oh, I can see how this is performing, okay, or it's cosmetics. It's probably natural type of cosmetics. Who would have thought, right? I've told a story in here before about ELF, the stock, and my daughter found, we had to go to Target to buy this eyeliner. Well, it was from this company, ELF, and these guys have the excitement's kind of died down, but back here they had these massive run-ups and they were really taking off. Now it's retraced based on TikTok influencers were pushing this product. So you never know what's going to push the stock higher. Obviously, it ebbs and flows. Nothing lasts forever, but you're getting these momentum moves. So this went from a high flyer all the way back to 57, the rank of 57, because it's just gotten pummeled during this move right here. And so the leadership is changing. The leadership is changing from certain groups to other groups. Okay, this is now getting some demand again back at these levels. It's a deep enough retracement that everybody that bought right here and said, "Oh, okay, we actually think this is a good company," more than likely they're accumulating again. Hedge funds, mutual funds, insurance companies, big institutions that are buying millions and millions of shares over time. They're looking for these zones and they're buying into these dips. Okay, a little bit different focus on today's topic as far as some of the utilization of TradersPro, because really, in essence, this is what it's designed to do. It's designed to keep you in the market conditions, to say what are our market conditions. We're in an uptrend. We're in a strong bull market. There is a theme behind it, and that is AI, and there is everything is growing, but we're at the top end of that trend. So I may not want to be allocating really aggressively to portfolio building, or I may want to have a smaller position size, or whatever the case may be. I want to know what the market trend is doing. And then from there, I want to zoom into, some of these other methodologies to say muscle stocks. Again, in the screens, you can do the same thing. The 21 scans, there's all kinds of fun stuff in here to say what stocks are moving. And you can also create your own in here to say, I still want all of that criteria, but maybe I'm going to add something that has some earnings. Sometimes earnings are completely irrelevant, because when you look at a lot of these names, Dave's not a good example because they actually do have some earnings, but you'll see some of these stocks that they have absolutely no earnings at all. I think this was one of them. Growth. Sales down 44%. Ideally, if you get both, there's big sales and the numbers are being driven, and then there's proof that the sales are coming in. Sometimes these big pushes higher are before the sales actually happen. So it's in anticipation of future sales. Remember that market prices are pricing in anything that is known or anticipated to be known. So the anticipation of future growth is the speculative fervor that starts to take off in a lot of these names. And then once the actual earnings start to reveal themselves and they say, holy crap, this thing is making so much money, and the stock price continues to go over, or you get like, oh, sales are slow. Maybe sales are slow now, but then this is, it hasn't taken into account the next quarter, and the next quarter earnings could be a blowout quarter, and you get even more price. It always, the earnings of the company always matter, no matter what. Now, the stock price may or may not reflect the earnings, but it will reflect the anticipation of those earnings, and that's important concept to understand as well. I'm going to end on that note. I appreciate everyone's time and effort, and we'll see you next time. Have a fantastic weekend.